Welcome, everyone. I'm Greg Schnell, here to host the Market Buzz. This show looks at weekly setups across the U.S. markets. Using the tools available on StockCharts, we'll be looking for long time frame trades. Please subscribe to my articles and Twitter feed. You can also enter comments in the chat room for me to answer at a later date. And don't forget, StockCharts still has a membership special on right now, and they extended it from last week into this week, so 1 week left. Anyway, strongly recommend if you're interested to subscribe soon before it's over. Okay, so we've got ourselves a bit of a rally trying to set up here off the lows, and actually I want to stay where I was. Just want to go to the next page. There we go. And so we're trying to digest the news that the Chinese trade deal isn't going to go forward. And there seems to be lots of support on both sides for everyone to hold their ground. So I think we're going to have some debate there. I did get a text just in the last couple of minutes here that the European auto tariffs are not going to be applied for about another 6 months. So they got pushed back. They were supposed to come into effect, or could potentially come into effect on the weekend. So that's probably good news, not to kind of create more disruption. The copper chart I showed on my market roundup article on the weekend, and what I pointed out was the copper charts rolling over and how that ties in with the S&P lately. So anyway, you can check that article out there. I'll also try to get there. I want to show a couple of different things. So the copper chart was kind of one of the things that started to fire. One of the bond charts that we've been talking about for a while fired off this morning. So I would still say that we want to see the 10-year follow through with that as well. I want to go into the international banks because Deutsche Bank is hitting a new low, and that's a pretty important bank. So I want to cover off some of those, and the stuff in Italy doesn't look much better. Weekly PPOs, different looks. So one of the things about the market in general is when everything's trending higher, it's obviously pretty bullish. And so there's a few different ways we can dissect that. So one is we can keep track of the percentage of stocks that have a declining PPO. And recently that got down to a real major low. And today we actually have some positive momentum on the MACD on the S&P 500. So it's actually on a 60-minute chart starting to make higher lows. So at least that is an improvement that we haven't seen yet. I still think that these trade wars, as much as they're going to be trying to bid up here, are a big deal. And so I think keeping track of these weekly groups are pretty important. So anyway, let's get over into the charts. And the chart I want to show first of all is JP Morgan. So this was 115, this was 116, and this was 117, so marginally higher highs. But it looks to me like this is a failed breakdown or breakout and is starting to turn down again. Of the major banks, so if we just go look at the broad brush of banks, and that's here, this is the U.S. banks only. And what I want to show is these lower highs. This also mimics the New York Composite, which is quite interesting. I still think it matters what happens to the banks. And this chart describes it pretty well. I do not like this PPO rolling over at zero. That is just about a Dr. Seuss line, but this PPO rolling over right at zero here is not a good thing. You can see it in the past here where it rolls over very, very low. This isn't a place that we want to be stubborn. And you could see so far, even today, with the S&P moving higher, this is not enjoying the ride. And so the question I have is, are we in for a wider problem? And so let's just go in and look at a few of these different groups. And I want to make sure I get time to get through this, but this is an example of the groups that all made weekly PPO crosses this week to the downside. And why is that important? So that tells us what's starting to break down as the market, if the market was topping, what's starting to break down. And just look through this list. So here's tires, steel, non-ferrous metals, industrial metals, commercial vehicles. Like, this is a who's who of the industrials, and all of these things are starting to roll over. Here's industrial suppliers rolling over, auto parts. So, these are the areas where I would be more concerned that there's a lot of trouble going on. I'm not so sure about the mortgage REITs and residential REITs. They're paying a bigger dividend, but I would definitely be worried about so many of these different areas in the industrials rolling over. And again, the transports have been rolling over, the industrials are starting to roll over. That's all a concern to me. So I think we really need to be aware of the big changes out there. So what I want to do now is just roll through these banks and make sure that sorry, I didn't get the bank sector here. I lost it somehow. There we go. So let's just click on view all. And these are set up with, first of all, I'll show it to you in summary mode. And the reason I want to show the summary mode is, again, if you're in a top performing sector, your scooter ranking should be above 75. So we have 5 stocks out of whatever, couple hundred here, that have a scooter ranking up above 75. So not very good. So the banks clearly aren't a great place to be. But more importantly is the health of the banks is a pretty big thing. And I think the US banks are solid and strong. I'm not concerned about the US banks. I'm concerned about the international banks. And the reason that I'm concerned is if we just go down, like we aren't even off the first page here, and from here on down, these stocks all have, PPOs, scooter rankings less than 50, which says they're weaker than the rest of the market. But if we just go down and start to look through whatever, I'm just going to pick the stocks, here's 40% and below, and start to look at how these stocks look. Actually, let's just go to view all and go to the third page here. And the reason is, again, we don't have that many stocks that are strong, but we have a lot of stocks that are starting to be weak. So this is rolling over. Here's Raymond James Financial, can't make a new high, rolling over. PPO very close to zero. TD Bank, big bank in New York. They have the most retail presence in New York. And this is making lower highs. And you can see all through this rally here for 2019, this thing stopped going up on March 1st. So this is dipping lower, and you can see there's not a lot of enthusiasm there. PPO at zero. US Bank Corp, same thing. We got tops in, and way back in 2017, 2018. So this hasn't made much progress, pretty much dead money, but this PPO is rolling over again at zero. So I think that's a concern. Here's Westpac Banking, and what you see on this one is, this chart continues to drift. After a big pullback, went up a little bit, really didn't take out November, December highs, and is rolling over now. So these are starting to show up. Here's Northern Trust, People's Bank, and these lower highs, I think, are particularly indicative of what's going on in the financials, and so we need to be aware of that. So here's Citigroup falling below its 50-day and very close to falling below its 200 or 40-week moving average. Again, all of these are weekly charts. So here's Invesco. This looked okay, but it really was a beaten up stock. Clearly went down, 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 and then basically had a small rally, and the scooter ranking is starting to tell us that it's getting worse. Now, again, I'm only on the third page, and they get worse from here. So here's Bank of Nova Scotia, or Scotiabank. This one is tied closely to emerging markets. They do a lot of stuff in Latin America. That doesn't look like a river up. Here's Bank Bilbao out of Argentina, rolling over very close to the December lows. I mean, we're only 10% above that. And you look over here, this is near 5-year lows. So my main concern, again, is that the globe is slowing down, and that the American market is trying to hold up. All of the trading partners matter. And again, showing you the industrial stocks starting to break down. We had weakening industrial output this morning come in quite a bit lighter than we were expecting. Here's Bank of America. Scooter ranking is down here below 50 already. And again, just sitting here at $31, hasn't been able to break out. And now after 2 weeks, it's down 10%, rolling over right at zero. Intesa Sanpaolo, this bank is broken the upward trend line, falling below its 40-week, rolling over at zero. Fifth Third Bank Corp rolling over at zero. Canadian Imperial Bank of Commerce rolling over below zero. And SunTrust, same thing, rolling over below zero. So you get the idea that these banks are seriously breaking down. Now here's Morgan Stanley briefly put in a nice move to 6 months highs, tried to fight it for 3 weeks and is rolling over. Again, having all of these banks, I think, is a concern, and obviously the yield is a reason, but it's only one of the reasons. And I think it's lack of capital investment that's starting to put more and more pressure on these banks. They can't loan out their money either. So here's BNP Paribas. This one, very close to 5-year lows, 20% off 5-year lows, and well down from the highs of 2018. This chart doesn't look like it's going up anytime soon. So this is a major French bank. Australia, the Australia chart looks relatively strong. Look at this downdraft on this Australian banking here. This is really hard. BB&T, again, couldn't make new highs, continues to roll over. Goldman Sachs Group rolling over. It's significantly below its 2018 top. Briefly tried to break out here and then failed. And I've been trying to write in most of my articles that when, if you're buying a breakout and the breakout fails, you want to be very, very cautious about holding on to the trade, because sometimes the false breakout gives you the biggest move down. And a good example would be, right up in here, you're hitting new 52-week highs on Barclays, and all of a sudden this thing starts to roll down, and it literally unloaded by 50% from that point. So in here, it hasn't done much really since January. We're back to where we were on Jan 1, and stock's at $8. That doesn't look very bullish to me, and not very far off the near 5-year lows, rolling over at zero on momentum. E-Trade Financial, same thing. This thing looks like a river lower. Banco Santander out of Brazil, rolling over. So again, Brazil had quite the stock market recently, and this is rolling over, falling below its 40-week moving average and breaking down. Sumitomo, so Japanese bank, very clearly, here's 3-year lows. So we had the brief stab in December down below that. This thing didn't rally at all, so I'm expecting much lower prices on that. Citizen Financial Group continues to drift lower. Charles Schwab doesn't look like an uptrend. We got Credit Suisse here. This is below its 10-week and 40-week moving average. Little uptrend here off the December lows, but rolling over at zero. I think these are very, very big problems. Here's KeyCorp failing at the 40-week moving average and rolling over. Big downtrend in momentum here. Looks like it's set to continue. Huntington Bank shares. Again, nothing here is really looking bullish, so this looks head and shoulders toppish to me. We're on the right shoulder and rolling over under zero. When you see that rolling over under zero, these are important places to watch. So Banco Santander, already covered that one. National Australia Bank, so another Australian bank. Does this look bullish to you? Look at how close it is to 5-year lows. Royal Bank of Scotland, breaking below its 40-week, rolling over. This one actually got above zero by a little bit more than most of the others, but very quickly losing momentum here. So that's a significant problem. Looking at Credit Agricole, another French bank, I believe, and rolling over here, falling below its 40-week moving average, and here we are right at the zero level. So again, rest of world stuff really breaking down hard. Here's Bank of China, Beijing. This thing is, priced in pennies to begin with, but rolling over as well. SVB Financial Group didn't rally at all from the November levels, so this looks lower to me. And you can see rolling over below zero. Zions Bank Corp, same thing, lower series of lower highs. So these financials rolling over at zero don't really give me any confidence in the system. But here's China Construction Bank. Look at the gap down last week, continuing this week in free fall, broke the uptrend, rolling over at zero. If you wanted to short charts, these are the charts that you want to look at. And to me, I'm not a big fan of shorting something that's paying a 2.5% yield or whatever, but for some people they might. but these charts look like they're ready to roll over real hard right now. Wells Fargo clearly not participating in the rallies here. Here's the December low, and it's only got, maybe 2 weeks that since then that held above that December low, and we're about to go test those levels. PPO rolling over well below zero. UBS, Swiss Bank, so rolling over here, just continues to keep leaking. Unibanco rolling over. These are all their dividend payments down here, but you can go back and look. There's a 3-year trend line here, but this is, very clearly on the road out. Everything at zero. So unless all of these charts suddenly get some big major spark, I'm having trouble imagining what that could be. But we've had a big stock market rally, and these things didn't get going. So here we are, falling down. Here's Mizuho Financial Group, Japanese bank. Like, this thing's ready to break to new 5-year lows. I still think Japan's one of the biggest problems out there. Comerica, uptrend here in play, but this is starting to roll over. And again, we're looking at the weakest charts, and that's because there weren't very many strong ones. But I just want to show you how weak the global financial system is in terms of their charts, and they're falling quite hard. And so here's Regions Financial, this chart rolling over. I mean, I don't think these charts are going to be the cause of any major problem, but this is clearly a large topping structure with something going on. So here's State Street, straight down. Another Japanese bank, again, near 5-year lows. Societe Generale at 5-year lows. Affiliated Managers Group, just, look at last week. This thing lost 20% in a week and continues to drop. So hopefully I've given you some flavor for how weak the global picture is. And again, JP Morgan and all those kind of things, I think, are just fine. But the issue is if international financials start to fall apart, that's a problem. So I have a chart here that I've been posting quite often, and it's a busy chart. But what it shows is that when you have, this is 2000, 2007, and now we've had this compression of yields and now starting to drift apart. And one of the things to notice is, see, this black line is the 30-year, and this blue line is the 3-month. And what you see here is that as the stock market fell away, the 30-year interest rate, while it might have been declining, was not declining. The yield wasn't declining as fast as all of these other shorter-term interest rates, and they plummeted. So one of the things to keep track of is the spread between them. And so as the spread gets wider, that would tell us that this is actually starting to play out. And if it stays compressed, then probably no big problem. So in the case of 2000, when it started to spread out, this was a big deal. And obviously having interest rates fall to new 20-year lows was a very scary moment. And guess what? It lines up right with the 2003 lows. And then we went on a big rally to 2007, came down. Now, this continued to drift as the financial situation was impaired, and it was in late 2012 that the Fed put in quantitative easing, and all the banks around the world did that, or all the central banks. So we got this big rally, and that kind of kicked things off. Well, now we're starting to do quantitative tightening, or at least stopping quantitative easing in America. The Japanese and the Europeans are still doing it. But anyway, we've got this yield curve rolling over. And so this compression is a pretty important thing for me. So one of the things I want to show you here is this is the chart of the 10-year. And when these big trend lines broke in 2000 and 2007, this was a pretty important place. In 1995, the trend line broke, and clearly it didn't matter. So I want to point that out. In 1990, we had a pretty significant pullback, and the market rolled over quite hard. So here we are with a big 10-year trend line, and you can look at this. This is the longest trend line on the page, starting at 2011, and things starting to improve from that. Well, the bond yield spread. So this is the 30-year minus the 10-year started to spread out. So now let's just shrink this to 10 years. And again, we're looking at that spread, the gap between the 30-year and the 10-year. And what we should find is that gap starts to expand. And so in order for the gap to expand, we'd expect this to start to turn higher. So what we're watching for is if this trend line is going to break, that's pretty meaningful. And in 2016, this trend line held on this chart. On the next chart, I'm going to show you with the 5-year, it actually spiked up and then fell back in. So here we are sitting right on this long-term trend line and watching very closely to see if this is going to break out. And you can see that this, since really the 1st of May, this thing's been going ballistic from 3.9 to 4.4 and moving up. It doesn't look that big on this chart, but again, this is a 10-year chart. And this trend line is now coming into play. Let's just pick a number, 4.6 is where the scale would be met, and we're at 4.45, so it would be 0.15 above here. Well, we were there on late last week, so this thing's still moving up pretty aggressively. And here's the 5-year, and what we see on the 5-year is again, this is a longer time frame from 09 to now, and if we just zoom in on the last 5 years, what you can see, whoops, lost my trend line there for some reason. Let me go back on the chart. Not sure why that disappeared. It's there. Okay, let me just see if I did something wrong. Not sure. I don't know why. That's odd. Okay, well, let's draw the trend line on and then zoom in on scale. So if we just take from 2014, the May high, okay, and annotate this and just come in here and just scoot down here. And this doesn't appear to be breaking today. On my other line it did. I'm trying to figure out what I've changed. Sorry, I thought I had this set up right. Anyway, I had this trend line as breaking this morning, so I'll have to go back and redo my work, trying to figure out what I've changed. Anyway, my apologies. Okay, so don't save changes because I haven't figured it out. Okay, so that was one of the main things I wanted to show. I'll try and figure out why my chart changed or what I've got changed. It might be the scale, logarithmic or whatever. Anyway, I'll work through that for the next show. That's one concern I have, is these lines are getting very close to breaking. Now, the second concern I had was just the number of groups that are starting to fail. And again, if we quickly go through and look at the different groups, I ran a scan to say how many have a PPO less than 2 weeks ago, and it was 130, which is a pretty big number. And then how many have are actually below their signal line, and it's 40. And we probably need to get up to 80 before we really break down hard. And then we have 17 that crossed down this week. And again, a lot of them were in the industrial area. So it's those things that I think are important that we need to pay attention to and just be aware of the overall macro change. But I think the global banks are something to stay focused on. The chart I didn't point out very clearly was, again, Deutsche Bank. And the issue on Deutsche Bank here is the 762 level. So today we were down to 751, and it's trying to rally off the lows. And this chart's just so ugly. This was a $21 stock just a year ago. Well, a year and a bit ago it was $14. But anyway, it's been cut in half. And again, this is one of Germany's largest banks, and this is Commerzbank, their other large bank, living below its 200-day moving average and trying to rally here today. But in the last couple of days has dripped back below its 200. So this looks like friction to me, and we'll continue to monitor how that goes. Let me just go get my... and the copper chart, I need to show you that. And what the point on the copper chart that I'd like to make here is, on this copper chart, when we've rolled over, and it's probably that one, let's just widen it out so everybody can see it. One of the things about the copper chart is when copper rolls over at zero, this is a pretty important inflection point, and you can see this was 2014, and that's when oil hit its high, and then it fell below zero, rallied back up, and this was 2015, and pretty much as copper rolled over, and I think we all remember the stock market topped in May 2015. So then here we are, late 2016. Copper's been winding its way up, and it got up near zero here, and it looks like it's going to roll over. So it did it once, then it did twice. So a couple of false moves, and then all of a sudden copper took off to the upside, and this was a pretty big run. And you might remember this was the election in 2016. Okay, so copper kind of hovering right at that level. Well, then we came down to 2018 and we rolled over, and copper pulled back meaningfully. And I think we all remember that it took until September for the stock market to crack, but it was a pretty good clue, and stocks worldwide got unraveled. Here we are again with copper rolling over just barely above zero, and I get the feeling it's more like 2015 because I have my high yield chart and a few others that are all starting to give me that same sort of signal. I think if I go to this chart list, looking for my HYGIEF chart. And one of the concerns I have is on this chart, this is the gap between HYG, so the without dividends and without dividends on the 7 to 10 year maturities, government bonds. And what we're seeing is this spread is starting to fall away. So this is a problem. And we're also seeing high yield starting to pull back and make a lower high and a lower high. And it briefly tried to break out, much like some of these banks. That's the gray shaded chart here, starting to break down. And just looking at HYG by itself, so if risk is rising, so is this. And again, this takes the dividend out of it, so it's not impaired by the high yield coming off. It's just the price action. And so this rollover and this fail at this big long trend line, I think, is important. That was the September highs that we hit there, and now we fell below those again after a false breakout. So this is a weekly chart rolling over. PPO still saying okay, but it was this touch at the 40 week that was a pretty important place. I think for those that were following, we mentioned that was a pretty good clue as well back here in 2016. But here we've had a false rally, and now we'll just have to keep watching to see where it goes. But I think the bond market side of things is telling us to get very, very cautious, and all of those charts together are starting to add up now. Oil and those names have held in there quite nicely, but I still think we've got a bigger issue. So here's the BlackRock Municipal Fund, and what I like to use it for is direction on the 10-year. And what you see here is this thing is shooting up and to the right and very, very bullish levels. It broke a big 6-year downtrend on momentum and is now pushed higher. So it's also one of the other reasons that I expect this bond market to break out. So with all of these things coming in, I think the 10-year yield was trying to test this 23.56 low, but it's definitely below the previous closing low already today. And again, that weekly chart, so we need to pay attention right to the end. Lots to cover off there. Hopefully you picked all of that up. I do want to say thank you for taking the time to join me on MarketBuzz. MarketBuzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 a.m. Pacific time on StockChartsTV. You can also catch replays on the StockCharts YouTube channel or on StockChartsTV, which has a running list of technical charting informational shows. Do not forget about our special. Only a few days left to try and grab it while it's there. Thanks, everybody. Bye-bye.